So while a lot of people feel that it's propping up the stock market, because there's two economies. There's the stock market economy, and then there's the real economy that we live in, right? And the one that we live in right now doesn't feel very good. So the stock is really an indication of how well I'm doing as me and my family. That's where people are right now. Now, one of the other things I wanted to run by you is gold since January 1st has gone up 50%. That's a huge run. There's a couple reasons for that, right? There's fear. People are trying to get their hands on as much as they can. Did you know when was the last time when it went up 50% in less than a calendar year? 1971. So you know what followed after that? Are you worried that inflation is going to stick around and going to explode here in the next few years?
Okay, historically, we have a fairly average interest rate, let's say at 6% or something like that. When it's matched with our price, though, it's the lowest affordability that we've camped out at ever. So if you have inflation and you give this real estate market a 10% mortgage rate, it'll lock in everybody that has a free and clear house. It'll lock in everybody that has a mortgage rate, and it'll wipe out the people that are on commission trying to sell something because there'll even be less volume. Will there be a ton of foreclosures? No. And it's very interesting, Joey. So to think back to 74 to 80, when interest rates went from 7.5 to 15. So when you get to 1980, there's a lot of bad charts that happen. We have unemployment at 10%. Like now we have 8 months of inventory and we're freaking out. You know how many months? They had 24 months of inventory and they had 10% unemployment. What was the price damage? Zero. Well, one of the reasons was they had everybody at a mortgage at 7.5 years ago. They were good. They just stayed there. They didn't lose their house. One of the reasons really taking a look at the debt, there's a lot of very smart people that are looking at national debt going, that's scary stuff. It's getting too large. We could lose our reserve currency status. Well, that's a very big statement and made by a guy like Ray Dalio. That's no joke because Ray Dalio, like I studied 50 years of real estate charts. He studied 500 years of world history and charted how every country lost world reserve currency status. And he feels like the U.S. is nearly at stage 5 of the journey.
He's got 5 stages, right? And we're 4.
Headed to 5.
And what I don't like about that is it's revolution or war.
That's right. That's very upsetting to society because there's the haves and the have-nots are accelerated. That's why, in our lifetime, this really hasn't occurred before. I haven't worried about the dollar not being the world reserve currency.
I think it's going to unwind over a longer period than it has in the past for a couple reasons. One, there's not the number 2 currency that's that close yet. And also the debt that is held is still held in dollars, not in other currencies. I'm not saying it's not happening because Ray's also not sure that it won't happen,